Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Michael Hostetler, the VP of Marketing at Crane Credit Union. I've really been excited to have some people on to talk about marketing, about not just selling through the branches, but marketing, digital channels, and how they're reaching customers in new ways. Michael really provided that in spades. We talked about how they're identifying Offus loans and using those to, really target outreach to customers who should be working with the credit union in more ways. Some digital marketing strategies, channels, what they've learned about how to make those work. And a really interesting concept to me, which is integrating the marketing experience with the user experience and kind of thinking of that in a holistic way to drive the best results. It's a really interesting conversation, a lot of great insights. So please enjoy this conversation with Michael. Michael, thanks so much for making the time to join us on the podcast today. I really appreciate it.
Hey, glad to be here. Good afternoon.
So I'm looking forward to this conversation. We're going to dive into some marketing topics, but I like to start all of my podcasts with the same question of my guests, which is most of us didn't grow up dreaming of being bankers, and yet here we are. Tell me a little about how you got into the industry and what your path was to the position you're in now.
Yeah, so when I was I went to Indiana University with the objective to be an accounting and finance major until I figured out I wasn't really that good at accounting. So ended up taking a path towards marketing, which was really a better fit for me. And it was my uncle who was the vice president of IT at a credit union in Indianapolis. And he got me my first internship at a credit union after my sophomore year of college. Mm-hmm. And that summer I worked in indirect lending all summer, and then came back and actually did it over Christmas break as well while people were taking time off for the holidays. So I'd come in every day at 8 and do car loan applications until 5 o'clock. And that was my entire summer that year. So that was my introduction to credit unions and financial services. And now I have been a full-time employee in the industry since 2005. So just past 17 years.
70. It's always hard. I look back and go, I feel like a newcomer to the industry, and I look back and it's been more than a decade, and I go, I don't know when that. I feel like I haven't been around that long. I think in financial services it takes longer than most because there's a lot of people with a lot of tenure in the banks and credit unions. But I don't know if you feel like you're an industry insider or a bit of a newcomer still learning the ropes.
I still feel like I'm a newcomer until we continue to hire people who are right out of college, younger than 25. Then I realize just how old I really am.
Yeah, I think sometimes it's hard to understand the perspective you have. Like you always are looking at what you don't know, and I found that particularly in college when I had to be a senior, I didn't feel like I'd learned that much. And then the freshmen come in and you go, oh my God, you go, you learn so much, and you go, it doesn't feel that way, but if it feels that way to you, okay. So it's interesting. So I wanted to talk a little bit about, you guys are kind of working on efforts to really market loans, which is interesting to me as a newcomer to the industry or 10 years ago. I kind of assumed that was kind of a common activity, but it feels like a lot of loans aren't really marketed as much as they're sold, or frankly, for most traditional consumer products, they're dragged with a purchase, right? Like nobody comes in for a mortgage so much as they come into it's dragged by the purchase of a house or the purchase of a car really drives a loan. But you guys are actually out marketing loans. Tell me a little bit about why, and then we'll get into what you're doing and what you learned about it.
Well, it became a necessity. I mean, with the pandemic and the stimulus checks that were going out, we quickly found ourselves with many more deposits on hand that we were used to.
I hear that story a lot.
Yeah. So, typically having a loan to share ratio, 90% or more, and now that being anywhere from the, low to mid 70s was a big adjustment for our credit union. And, going back to talking about that experience in the industry and, being somewhat familiar with, the auto lending market, this is the first time in my career that I have had to really heavily market loans and try to seek them out because they were just always there, at least in the form of auto loans. So it's been a little bit different, and we've certainly become a little bit more aggressive in our approach and finding new ways to have those conversations with our members. But yeah, it's an ongoing challenge, and unfortunately, I think it's still going to last for a little while.
Well, it's probably an interesting muscle to build. So tell me, what are the kinds of loans you folks, you said, hey, let's go out and try and find and market and actually seek these things out. Are there types of loans or types of consumers you focused on? and then I want to get into some like the how and the kind of details. But I'm curious, like at a strategic level, what was the focus area for where you wanted to do that and why that was?
Well, our hope is that with our staff that, they're going to be having those conversations with members
Hmm.
and reviewing those credit reports to see where there's refinance opportunities with loans at other institutions, or if they have life goals that are coming up, such as purchasing a new home, that we can be their trusted source for that type of product. So that's been a big objective for us. But we've also focused a lot more heavily on our first mortgage business and our commercial lending business, including hiring more staff to handle just those areas. So we've been fortunate enough to grow very quickly with the acquisition of a couple banks in the last couple of years. And
Hmm.
really, a big part of those acquisitions has been adding to those teams. So we're starting to see more success in those areas, and we're looking to grow those teams and start growing more of that of our lending portfolio in those areas, as opposed to just focusing on auto loans, which have been our mainstay for a very long time.
Hmm. And talk to me about like marketing versus sales channels. Like when you go, hey, let's go find loans. I think traditional banking approach has kind of been they get sold by the people in the branch, right? You come in and you have that person looking at the file or talking to the person. And I think of that as a very different thing than marketing in some sense. There's definitely enablement and training and some, but like marketing to me is more of a one to many, right? Going out, not in the context of a one to one conversation, but trying to figure out at a broader scale who am I going to reach out to with what message through what channels to drive that demand to me, which is a quite different muscle and one that I had not understood was so underutilized, if you will, in many financial institutions. So talk to me about your approach to that. Like, were there channels you were trying to do, targeting you were using? How are you thinking about the kind of one to many side of the marketing of that process?
Well, for us, a challenge in a lot of our communities that we've even had branches at for a long time is that people didn't know all the products that we could offer them.
Mm-hmm.
They may have thought of us as just a resource for car loans or checking accounts and something like that, and didn't think we were qualified to handle more sophisticated products like
Mm-hmm.
mortgages and home equity loans. So that's been something
Interesting.
that we've tried to approach with our larger advertising approach, that this is the place for loans, period. Come and talk to us if you
All
have a
types.
lending need, and we're going to get you in the right product. Now, on a one-to-one level, we've had some success with mining our internal data and finding out where people have their loans at other institutions, be able to craft marketing pieces that reference that. Hey, you've got
Interesting.
a car loan at Chase. Have you thought about refinancing with us? And if you do, here's an incentive to bring it over. And when we start making those offers a little bit more personal and relevant, it definitely increases the awareness and attention of the offer. Um,
Interesting.
a big thing we've focused on recently is that new member and new loan onboarding process, where we're doing the same thing, where we're educating members on additional products that might be a good fit for them, and doing that right after they've come and speak to us for the first time. So even if an employee hasn't been able to have those conversations with them, they're still going to get some follow-up marketing that they can act on, with links to our online loan application and the contact information for their local branch manager that they can reach out to.
That's really interesting. So I want to dive into both of those things you said. One, this idea of what I hear a lot of people in the industry refer to as off us loans, the realization that your customer has a loan with somebody else that you wish they'd had with you, and the ability to bring that back into the family. How are you finding that? I mean, is that a credit bureau targeting? Is that a depository activity you're seeing payments go out or deposits come in? Like, how are you finding that? And what are the challenges you find in tying together the data sources and figuring out how to target that outreach? I feel like that's um, sometimes that data does not live in a system that a marketing team has access to and the ability to leverage in that way. So I'm curious what data sources you're using and how you're thinking about, hey, here's how we can find those off us loans and find the people who, I mean, you also don't want to reach out to people and go, refinance your Chase auto loan with us. Here's a rate that's 4 points higher than you have at Chase.
Right.
That's not a good message. So how do you think about making that work and what data sources are you using to do it?
Yeah, it's been primarily ACH data by seeing what
Mm,
loan payments were coming out of Crane. So that was the first place that we started, and then we were able to craft enough of a personalized marketing message from there to get people's attention. And in some of the communities that we work with, they're rural communities, they're pretty small. There's still some mistrust there in larger institutions that I think we've been able to capitalize on. So I think people have wanted to bring more business to the credit union to consolidate their business, or that they rather work from us on a customer service level. But I think that the way that we've built empathy and trust with our members helps bring those products over. So that's been a primary key for that. And to us, it has been a challenge getting that data out of our system. But the biggest challenge from a institution standpoint is really finding the right people that can help you get that data out of your system. So, getting that data out of our core system wasn't really easy, and we, had a data analyst on staff that was their primary objective, and it was a lot of work up front. But we started to see some success with marketing, and going forward, I think we're going to have to keep using the data as much as possible to learn about our members, what their behavior is, and do a better job at anticipating the needs rather than being reactive towards them.
Yeah, there's two things I love about that story, which is one, it's a thing I've been harping on recently with a lot of the conversation I've had, which is the investment in data infrastructure and the capability to bring it and use it in the right places, the right times is really important. But I also love that you guys starting small and then showing value. I think is such a valuable way to build, because you can say, here's the data architecture system I'd like that takes millions of dollars to build, but if you can go, hey, we got one analyst, we've got a project to find Offus loans, we're going to do it, we're going to see success in marketing. I think that changes. I'd be curious if this is your experience, the nature of the conversation about the next project you want to do or the next data source you want to integrate. Because it goes, hey, we've seen this thing work. We've seen it add value. Now I get it. And that's a lot easier to build on that success than it is to try and boil the ocean and try and solve all the problems up front at once.
Yeah, we know that there's so much that you can target based on the information that you have available, and that's really the challenge. Where do you focus, and what do you give most attention to? And from a recipient standpoint, how can you make that a marketing offer so that they're actually pay attention to it? Well, if you're referencing some piece of information that they already know, that's going to make them feel a little bit more comfortable. And ultimately, we'd like to be able to use that information to make an even more specific offer to them with that information that we have. So, hey, lower your payment from 450 to 300, by refinancing with us. Click here, and it's just that easy. Something like that's always the objective, but how to get there is the difficult part. Ideas are up here, but the steps to get there, that's where we have to spend a lot of time.
Yeah, and one of the things we always focus on, and I'm curious if you do this in a systematic way or not, is what's the thing I can do that's the least effort and the biggest learning about, how much better does that offer convert? How can I figure that out without having to solve all the problems to make it real for all my customers? Can I go find a way to learn how valuable that is so I can quantify to the business why we should make the investment in the infrastructure we need to be able to make that kind of offer? Is always that speed to learn, and we're always, how do we reduce what we're trying to do down to the smallest thing that gives us the biggest chunk of the learnings we need to figure out what the next piece of the puzzle is, the next thing we got to do is to drive value.
Yeah, part of my experience in credit unions, I had the opportunity to be a part of the Filing Research Institute's I3 group. Been a number of years now, but what that group really taught us was how to have an entrepreneurial mindset when approaching issues that your credit union is facing. And we spent some time in Kansas with a gentleman who kind of took us through that innovation process. And one of the things that he said that's really stuck with me is that it's really important to fail fast and fail cheap. And we go into that with we approach a lot of projects with that mindset that, well, we have an idea, but it's inevitable that something's not going to work out exactly how we planned it. But as long as it doesn't cost us a lot of money, you kind of generate an opportunity cost there where you can take a shot at something. And I'm also fortunate enough to work with a team that allows us that type of freedom, that we're allowed to screw up every now and then if we learn from our mistakes.
Well, I've always tried to help people reframe, if you learned what you wanted to learn, even if you didn't get the business objectives, I don't think of that as a failure. If I said, hey, we missed the mark, but we figured out where, and I can recalibrate and I can hit the mark next time, then that's maybe not a business success, but it's not a failure in my sense, because we actually have our team often define their business objectives and their learning objectives for a project. And if we miss the business objectives, but we achieve the learning objectives, then we've done something valuable for the business, even though we didn't drive the growth we wanted or get the applications we wanted or whatever it might be. And I think it's an important mindset. You can't. I don't want to think of it as failure, right? Like I don't want to tell somebody you failed. No, you didn't. You learned what you set out to learn. You learned that your hypothesis was wrong, right? But hopefully we learned some things along the way, and the next time we'll be better informed to make a better choice. And that's, I want that to be celebrated, to be encouraged, and that means I think failure is a tough word to assign to it if you want to have that mentality.
Well, in most cases, you're going to generate more business, but it's very unlikely that you're going to lose business through that course of action. So, when we were trying to use this process to get more loans, we figured if we got at least one loan out of it, that it was probably beneficial. But we weren't going to have anyone running away from the institution because of this targeted
Yeah,
offer
yeah,
that they got.
yeah. So I want to dig into the other thing you said, which is this kind of like new member, new loan quickly. How did you think about how you do? I always worry about adding friction into the onboarding process. How long do I need to? I don't want to like stop you getting a deposit account or stop you getting a loan to say, hey, before you finish the loan, go get this checking account over here with us too. And like now I've like maybe lost both. As opposed to getting two products, I might get none now because I added friction. How did you think about the best way to integrate, bringing a new member in and then getting them to look at multiple products at once without introducing the kind of friction that can cause drop off on the thing they came to you for in the first place?
Well, we approach it as that, we're talking about a relationship with the member. We're not trying to approach it as a sales
Mm,
opportunity. So there's some timing considerations in there where there's a little bit of leeway between the first product that they get and what we feel is the next best product for them to take on with the
mhm,
institution. So in lending, a lot of times that's a credit card. That's the next offer we'll hit them with. That's pretty easy to move. It's something everyone has in their wallet, and it's a pretty it's not much commitment to change a credit card over to another institution. Now, when you're talking about things like a checking account, where you're talking
mm,
about managing someone's everyday financial business, that comes a little bit longer in the sales cycle, but it's still fairly condensed. Those are real moments of truth when members are opening new products where they're actually considering making those changes. So we think it's a pretty finite window there to make a sale opportunity happen,
mm.
just when they're in the process of doing all that work already.
Yep.
And then we've got some parameters set up that, over the course of the member relationship, we're going to reach out, every 3 to 6 months on certain products that they're
Mm,
showing up that they're a good fit for, more or less just to remind them that, hey, we're here, we've got this product for you. Other members like you have it. Do an online
mhm.
application, see what it takes, and we're able to market those types of things for a very, very low number and makes it the ROI on it just fantastic.
Great. Now I want to dive into something a little different. We've kind of touched on it, but it's you guys have done some work around digital advertising, and I think that's an area where a lot of people are looking, but there's a lot of lessons to be learned, challenges. So I'm curious, kind of what your experience has been, what's working, what's not for you in that space, because I feel like it's a newer space, and most of the institutions I talk to are saying, "Hey, we know we got to be there. We don't know what we don't know, and we're trying to figure it out along the way." And you guys have kind of been playing this for a while. What are you doing in that space, and what's working well for you?
Well, when I started at Crane 7 years ago, that was our biggest issue is that we just didn't have enough engagement with our existing members and the communities we served. So, we might have an auto loan special here and there, and we might do a radio
Mhm.
ad or a newspaper ad, but that was really like it. That was all you would
That was
hear
the
from the credit
communication.
union.
Yeah.
So we approached digital advertising with more of a continuous engagement based on the credit union's
Interesting.
goals at the time. So, a lot of times we'll be doing, especially right now, we're doing a lot of lending advertising. But, as that situation improves, you'll see us doing things that are more brand oriented. We're always trying to get checking accounts, of course, and move people over here. Um, Now, from our experience, it goes back to, having a team behind us that really lets us run with the ideas that we have. So we really jumped in head first. Our biggest motivator is that we had a lot of locations that were really spread far apart. So digital was the easiest and most efficient way to reach as many people as possible for us, and we
Mhm.
could also attract results. The reason for our success, though, has been working with outside partners who understand it. And from an
Mhm.
institution standpoint, admitting that we didn't know exactly what we wanted to do, but we had objectives in mind and just asking a lot of questions about what's the best way to get there. So we've learned a lot about digital advertising, search engine marketing, search engine optimization and employing tactics that we definitely weren't doing 10 years ago. And with the growth of the credit union, that work, along with our acquisitions, has spurred a lot of growth in the past 7 years.
That's awesome. How do you think about one of the questions that I was finding? You can duck this one if you like, but one of the things I find hardest in digital advertising is this sense of like multi-touch and the idea of like how do I measure the quality of a campaign when likely I'm through, if I'm in Facebook and Google, we see oftentimes people see two, three, four, five of our pieces and then they convert and you go, okay, which of those was valuable? Was it the last one they saw that they clicked on right before they converted to a product or a process? How do I value the different times that I'm reaching a person? Have you guys done any work in that front? How you think about, piecing together, not just because like Facebook's, I think, great and Google's great if it's like click, convert, measure, number of clicks, how much I paid, number of conversions, how much were like, it's great. But then you've got this world of like, it's not that simple. And you're trying to piece together what the value of all the activities are that you may be interacting with the customer. And one who maybe sees something on Facebook, doesn't click it, but then comes into the branch and asks for something, you go, hey, do I credit Facebook for that or not? Have you guys thought about how you do that or done anything interesting and how you're approaching? Because it's like a really hard problem. I think even for the most sophisticated marketers I know, this is a bit of an unsolved problem, to be frank, at least a challenge for them.
Well, to that end, I think it's more an issue of, how much credit do you want to take for it?
Yeah.
So we use the word influence quite a bit. So the direct
Mhm.
marketing to our existing members is easy to track, or at least put a number out there where, hey, this member got this piece specifically to them for this product, and they opened it within 90 days. Let's call that a conversion.
Mhm.
But I have told our team that it's unfair to say that that's the exact reason why they opened the product, because there are a number of factors in play. It's maybe we just hit them at the right time with the situation they're in.
Mhm.
Maybe someone when they the last time they had their credit report reviewed brought it up, and it spurs. Oh yeah, I remember I talked about that with Kevin 6 months
Mhm.
ago. It's always a number of factors that go into a purchasing decision, and that's how we approach everything, and that's how we uh, we talk to our board about the effectiveness of our advertising. We're going to
Mhm.
try and have a consistent message across as many platforms as makes sense, but that message is going to be consistent, especially if it's an individual offer. So one example of that is we have personalized offers in our online banking and mobile app ads that we can remarket to. And again, we can't tell you which ad definitely influenced your sale, but we know that we use multiple tactics to get there. And I think it's just how our human minds operate. We can't nail down why we're there, but somehow we got there. It's like
Yeah.
trying a new restaurant. How did why did I pick this one? Did I hear about it from a friend? Did I see an ad? Did I hear about a friend? Then I saw an ad for it. Now I'm going to go make a reservation. It's tough to nail down. And I don't know. Maybe
It's
that's
usually
an
not just one.
maybe that's
It's
an excuse
usually,
marketers use, but I believe in it that it takes a lot of different things to get someone to move, especially
it
with a
does.
big purchasing decision. Mortgages and houses, those are big decisions for consumers. They don't make those on a whim.
Yeah. There's no singular touch point that drives that decision. All right. One last area I wanted to ask you about is I kind of love this um, intersection where marketing kind of gets involved in discussions about the user experience and how we, you know, I think that there's kind of this kind of very separated version of like marketing gets people there and then some product team manages the thing after the fact. And then there's like this clean handoff, which I think is just not real and how the world works and how we influence conversions. And I think you guys are doing some interesting work in how you get involved in what the actual UX post just somebody showing up at the site or in the branch is. Would love to hear what you're doing in your experience, because I think it's this idea of integrating those disciplines and teams is really interesting in terms of driving a better outcome and better user experience.
Yeah, I've always had like a really good relationship with our IT team here at Crane and other institutions I've worked at. So I've been, whether intentionally or not, I've always been involved in some of the e-commerce projects, and I've always been able to, take to those things pretty easily. So I've always kind of had a voice at the table. But it's very important. One of the things that we're looking at now with our website is, through analytics, we can track that we're getting a lot of new visitors and we're getting more traffic than before with our advertising, and certainly our increases in advertising. but it's not necessarily translating into new members. Well, why is that? Are they not finding the link? Is it an issue with the
Mhm.
application? That's where those teams start to collaborate together and see, okay, what are these issues that
Yeah.
are happening right now, and you have to work together. It's really important, and your team has to work well together to make that happen.
Hmm.
We don't believe in silos at Crane. We're a very open group. We all are very we work together very well and have good opinions to share, and we just want to work in the end for our members and for us, because that makes things a lot easier for everyone. That makes coming to work every day a lot easier when you all get along, and
Yeah.
noting where there's areas of improvement. So if the marketing can get you to the website and get you there, but it doesn't do anything after that point, then the marketing just doesn't really work, does it?
Yeah. No, I mean, ultimately, you got to measure. I think thinking of it as like my job is coming to the website. It's your job to finish the job. Like you just can't ultimately drive success that way. And those things are not as independent as we might, you can draw them on a nice flow chart and have a, have a separation at the arrow. But I don't think that's how the user's mind actually works in the end.
The same thing applies to making sure that those offers are as relevant to the member as possible. If we're sending out an
Mm,
offer for an auto loan to someone who's not going to qualify, that's just going to take our staff's time to go through that application. So we're also very cognizant of that, of making sure that we're getting the right people in front of our staff and making
mm,
their work as efficient as possible. And again, some of that comes from experience and feedback from the staff that, hey, you sent out this credit card campaign and I'm turning down a lot of credit card applications. Maybe we could tighten that up next time. Oh, that's
yeah,
great
yeah,
feedback, and let's make that better and make it easier for everyone. And then the marketing stats look better on top of that.
I love it. Well, Mike, I appreciate the conversation. I got three questions I ask everybody at the end of this podcast, so I hope you're ready for
Let's do it.
it. So the three questions are: number one, what's the best piece of career advice you've ever gotten?
I don't know where I picked it up from, a podcast or book or someone I was talking to, but one thing I heard was that you should not walk into a room and assume that you're the dumbest one there, which kind of translates to, maybe people aren't as smart as you think they are. So I don't think that kind of translates to, make sure that if you have an opinion, speak up. The worst thing that people are going to do is just ignore it, but never think that you're weaker than someone else. And that's something that I've kind of talked about with our younger employees that come to the credit union. Like, you're here for a reason. We hired you. You've got something to share. We need the help. Don't be afraid to speak up. And
Yeah,
that helps a lot. That helps a lot. But I can't tell you where I picked it up. Multiple touch
uh,
points.
I love that. And then the corollary that I've had that I've given people is like, I think that sometimes you got this question in your head where like you don't understand something people are saying, and the number of times I've gone, I'm sorry, I don't understand. And then in the end, you think everybody else knows, and you're the guy who just is like, I'm uninformed, whatever. And then I get out of a meeting, and like half the people go, I'm so glad you asked that question. I don't understand. I go, why did I felt like I was the only one, like I was behind, and I felt bad. And so often we just stay quiet when we don't understand because we just assume we're the only one, and we don't want to show our ignorance. And I go, well, maybe it's not that I'm ignorant. Maybe it's just that nobody understands and nobody's raising their hand. So I sometimes being willing to ask a dumb question is my equivalent to that, where I say, if I don't understand, I'm just going to ask. And you can think I'm dumb because I don't know, but like maybe I'm uninformed or whatever. But like I want to understand. And often I find that people not the only one, usually not the only one. Second question: what's the best advice you've ever gotten about the consumer banking or consumer lending space?
Um, I would, very early on when I first started with credit unions, there was a CEO from another credit union that told me you should always be trying to get loans, always trying to get loans, no matter what your loan to share ratio is. If it gets close to 100%, you still need to try and get those loans. Um, whether that's because someday, like with the situation we're in now, they're going to go away, or if that's the way that you're really helping people by extending that credit and making their life goals possible. But he told me, like, you should always be trying to get loans, no matter what. So never slow down in that regard. And that's been pretty easy to this point. But now we're in this challenging time. But I come back to that often. Just stuck with me for some reason.
Always be trying to get loans. All right. And my last question: what's one bold prediction for the future?
Oh, I mean, it's so uncertain right now.
That's true.
you know, I think there are a lot of changes coming with people, with basically how people do quote unquote banking.
Mm,
I think that you're going to see some situations where um, the lending space definitely changes. So certainly now with the buy now, pay later, that becomes a lot more prevalent. I could see a lot of challenges with a traditional auto loan. But I honestly think that we're going to look at home ownership a lot differently in the future
oh, interesting.
than probably either one of our generations looks at it. Owning a home just sucks. It's maintenance. It's a large amount of money. Right now, the rates are high. Um, if you get a 30-year mortgage, you're not going to live in that house for 30 years. That's very rare. So I think that idea of home ownership is going to change a lot in our lifetime. And I would say the same thing about car ownership with ride sharing
Mm,
becoming a lot more prevalent, autonomous vehicles. Um, I can see a day where with homes and cars where you're paying a subscription fee like you do for Netflix or Apple Plus or Prime or anything else with like, hey, $50 a month, that's what I pay for my car service, and it picks me up and takes me to work, and that's what I use it for. And owning assets is not going to be what it is right now. It's going to be a lot different.
yeah, it's definitely true that owning a home, like my kids are always like, tell me I can never leave this house. I'm like, Daddy wants to move into a condo when you that is good. That is good with the maintaining the house thing. I've done it for a while and it's great for the family, but at some point, like it is not exactly my favorite part of of the experience. So I think that's a really interesting prediction that the shift towards away from maybe the focus on owning assets that we've always thought is the thing you're supposed to do. Well, Michael, thank you so much for joining me today and sharing your perspectives. This was a great conversation, lots of great insights, and I appreciate you making the time.
Appreciate it too, Jeff. Thanks for having me.